Be great for waiting out a market downturn. Let's bring in Josh Bennett, Senior Portfolio Manager, Weatherbie Capital. It's good to see you. Welcome back.
Thank you.
Let me ask you just a simple question. Why is growth outperforming this year after being such a laggard last year?
Sure. Last year was a very difficult year for all portfolio managers, and particularly for growth. And I would say within that, small growth was challenged even more. So I think what you're seeing, to some extent, a relief rally in the exact stocks that got hit hardest last year. You're seeing a lot of those rallies. Some are quality. Those are the ones that we want to own. Some are low quality. Those are names that we think won't survive or won't stay at those levels.
Yeah, I mean, it's been pretty remarkable the degree to which some stocks have rallied. I mean, we were just talking about Palantir, for example, is up like 20+% on the back of an earnings result, a stock that was already up 10% in a month with a lot of those names. How do you discern what's quality within that universe and what's not?
Sure.
Because not all, even if you're not profitable, some stocks may be deemed to be quality.
That's right. We look at quality a lot across several metrics, but one that we're looking at now is we're looking for more and more companies that, instead of having to wait 3 years or 5 years to generate free cash flow, for example, we think that they can generate free cash flow in the next, say, 1, 2, or 3 years, or they're generating cash now. They've proven to be good deployers of that capital. So quality management teams that do what they say and deliver on their promises, companies that generate significant free cash flow, companies that are more predictable. So we look for companies that have higher recurring portions of their business that you can count on revenues coming through as they expect, and therefore when they guide, you can put a little bit more weight on that guide and you can see what the potential upside would be. So
still, they're all longer duration assets, if you want to call it that, is still susceptible to moves in interest rates. How close are you paying attention to the CPI tomorrow for this sort of portfolio that you run?
Yeah, so we are bottom-up stock investors, so I'll start with that. But I will also say that as a portfolio manager, you would be ignorant to not be watching the macro news right now. So the CPI number tomorrow will be important to watch. But when we invest in a company, we're really looking out 3 years, 5 years, even beyond that. So while the CPI matters tomorrow in terms of understanding where are we in this cycle, it's not going to drive a stock decision to buy or sell tomorrow.
Let's give 3 names.
Sure.
And tell me about each. Planet Fitness, number 1 on your list, that fits the profile of what you're looking for. Why?
Yeah, what's interesting about Planet Fitness, I think most people know the brand, is that as people are coming out of the pandemic, they want to get outside. They care about health and fitness. They saw through the pandemic that health and fitness is more than just looking good. Health and fitness matters for a lot of reasons, including fighting things like COVID-19. So Planet Fitness is much more differentiated than we think people realize. Planet Fitness is a stable growth company. They have over 2,000 fitness centers, 16 million plus members. So strong scale. Now, what that scale does for them is it enables them to invest in marketing. So they sponsor the New Year's Eve event every year. Most people have seen them there, but they also do extensive TV advertising. And they also can invest in technology. They have the best app out there that allows people to sign in to their and sign up as a new customer, but also to work out when they're not at a Planet Fitness gym.
Tell me about First Service Corp before we go.
Yeah, First Service Corporation is a real estate services company. This is in that category of highly predictable, recurring businesses. They just reported last week, very strong quarter. The half of their business that does property management services, people are moving to plan to manage communities. First Service is number 1 in that business. The other side of their business, they have branded services that take care of restoration, for example, with Hurricane Ian last year, and then now the Texas freeze or the West Coast freeze. First Service is doing the restoration of homes from that. So highly predictable, recurring nature business, and 19% compound annual growth rate for 25 plus years. So talk about a company you would think is boring, but is actually quite exciting from a growth perspective.
All right, we will keep our eyes on it. Thank you for being here.